Hello and welcome back to the Portfolio Podcast. On this week's episode, we're going to find out if Legal & General are the insurance policy your stocks need. So, Legal & General. Today we're going to discuss all about their stock. It's one of the stocks that myself and Ryan do have shares in. So, as you can see, I have 132.6 shares. I've had a roughly 9.45% increase since about August time. And that's not including my dividend payments as well that I've had since then. And also then Ryan has 910 shares. And has around a 60% increase, which is just ridiculous, and I can't wait to see that sort of increase in my portfolio.
It's probably one of my favourite stocks out there at the moment because it gets slept on, and I think you'll discuss that a little bit later on. But it's a company that you probably, unless you've seen the adverts on YouTube lately, because they seem to have done a huge advertising push, you may not have even heard of them, but they're an absolutely colossal company, and they just deliver strong performance year after year after year after year. So I'm quite happy to just keep purchasing more and more and more.
So a bit about Legal & General. They have £1.3 trillion in investments, okay? And they offer life insurance, pensions, retirements and investment plans. They also have a diverse portfolio of their investments that from this their plans, money that comes in, they reinvest it into lots of different areas with things like green energy and affordable housing and many other real estate areas, which is, I think, really good. They also provide legal services to millions of people, or have done to millions of people in the UK and USA over the last decade.
Yeah, so Legal & General, that 1.3 trillion of assets under management isn't necessarily their own money as investment. So what happens is a lot of the defined contribution pension funds and pension pots that people have is that you invest them with a group like Legal & General, for example. Legal & General manage those assets and obviously take a fee and a commission off top of that. So that 1.3 trillion isn't their money. It's other people's money
it's money that they're managing. Yeah,
exactly.
Yeah. It's the that's the money they have to invest and try and earn money out of.
Exactly.
Effectively.
Yeah. It's interesting because they seem to break their company down into a number of different sectors. Some looking at retail, some looking at institutions, some looking at property. They've got quite a nice breakdown, and when you look at the financial reports, you can see how each of those independent areas are performing. Specifically the pension ones. I know the pension ones struggled a lot during COVID, but they seem to be returning. I say a lot in comparison to some of the ones we've done on City ones. It's not a struggle. They've definitely weathered the storm.
It's tiny.
Weathered the storm very, very well. But yeah, chances are you might have a pension pot that's probably with Legal & General. If not, then obviously you're with another bigger firm. But 1.3 trillion does make them one of the biggest players in the game, with the exception of people like BlackRock and Vanguard, who've got nearly 9-10 trillion of dollars of assets under management.
They've consistently delivered high yield incomes for stockholders. Ryan, I think you said something about 11% earlier.
Yeah, so they've averaged an 11% compounding return year on year since 2011, which double-digit growth is ridiculous.
Crazy. Yeah, I mean, so this is one of my best performing stocks, and the dividend is lovely because it's one of the bigger dividends. Even the half year dividend is one of the bigger half years that I see in my account. Look, it was 6.4% dividend yield is what Dividend Max are expecting for this year, and that's with a 96% accuracy rating. And you can see on the graph on the bottom right that it's constantly increased since 2012. So everything's going in the right direction. Yes, there are some cons, but they're not massive at all. In fact, I'd probably say they're minuscule cons.
This is one of the ones that's baffling me with this stock, though, because they've been growing for 11% year on year since 2011. Their forward-looking growth looks incredibly strong, at least up to 2024. At least what their model's showing for it. They're predicting low double-digit growth with a low to mid digit growth of percentage digit growth of their dividend. So their numbers are really high, but yet their dividend yield is astronomically high at 6.4%. I know the price I've got in it, my dividend yield is currently sitting at like nearly 10%, which is unheard of. So I can't seem to see anything that warrants the higher dividend percentage yield, because normally that's considered greater risk.
Do you think it's maybe because they have real estate stuff and they have to perform that area of the business a bit like a REIT?
Not really, no, because it's the whole point of how the higher dividend yields generally indicates more risk with the company. That is what it indicates.
Mm.
So if
Yeah.
they've got
Yeah.
property exposure, which is generally considered a safer investment, then surely you would expect to see the dividend yield to be far, far lower than it actually is. So
Yeah.
it's almost baffling. So if anybody out there does know a reason why the dividend yield could be so high in this stock, and obviously please tell us what we're missing. But from what I've seen, at least, it all looks pretty hunky dory, cozy, and another one of those like when we
Yeah.
spoke about with Unilever, where you don't really think about it too much. You just keep investing.
So the cons of Legal in General, their Trustpilot reviews around 3.2, which is not the best. This is mainly due to bad customer service reviews. But if you look at some of the 5-star ratings, there's some great advocates of their customer service. So I don't know whether it's down to particular branches or, I don't know, particular people that people have come in contact with. Or maybe it's just down to the things that the public are asking of them. Maybe they're just things that Legal in General can't do, and they're taking it to heart and saying that it's bad customer service. I don't know. But that's what the reviews seem to say.
Yeah, it's an interesting one. I'd be interested to see how broad that data set is, because when you actually look at their half-year report, they talk a lot about what they've done during the COVID impact. So they made £1 billion extra available to cover this sort of stuff, and provided companies and people with cover for that, ensuring people got paid their pensions, etc., etc., etc.
Yeah.
So they appear to be doing quite a lot, and they're generally very much focused on their environmental impact as well now. So they're saying by 2030 they want to halve their environmental impact from their investments effectively, and then by 2050 they want all of their investments to be net zero. So as a company with so much assets under management and so much money to be able to drive into companies and remove from companies, they can sort of force a change in the environment. I know BlackRock are doing a similar thing by not investing in coal mining firms and stuff like that.
Legal in General are putting a lot of money into green energies. I think it's something. It's not massive. I think it's about 20% of the business in total. Of their assets that they're managing, they're putting into green energy. And also then I think the one that really has a nice impact is the affordable housing schemes that they're trying to set up.
Yeah.
And all of this together just makes it just seems like a really ethical, nice business.
Yeah. But the thing is, you say 20% of assets into green thing, it's 20% of 1.3 trillion, so that's 260 billion pounds of investments, which they can sort of sway into green investments and sort of help lead that green revolution, if that makes sense. So at least from an environmental impact, it's good. It's just obviously, is that 3.2 Trustpilot rating from historical data from years ago where they've not been improving on it, or is it something recent? So
there is that. The final point, just off the back of the COVID conversation we just had, during the COVID year, the dividend didn't increase, but in the first half of this financial year, they have increased it by 5%.
Yeah, so it's sizable.
So,
I know their forward look anyway. They're looking to increase it to low to mid digits every year up until 2024 at the minimum at the moment. So they're on track to do so. So as far as concerned, there's growth to an already high dividend yield. So things are looking fairly rosy with it.
So what's in the news? So Berenberg Bank have just given Legal in General the hold rating, which means that they have no intention of selling this stock. And I agree with them. I don't have any intention of selling this stock either. And next, only 2 articles, because there's nothing negative about this stock that I can see in the news anywhere from the last 10 years. So the other one is that they, Seeking Alpha have said that they're one of the highest yielding blue chip stocks, earning 6.5% dividend a year roughly, which is just a nice bit of news. Onto the forward look, I suppose. So looking at their dividend, and their reports, they've delivered consistent and sustainable and forecastable results over the last 10 years. They have lots of plans for affordable housing, green initiatives, and they have a great financial and strategic outlook. There's nothing in their finances that I can see that could be a problem. Anything you could see, Ryan, at all in their finances?
No, nothing major. The only ever so slightly point was that their debt repayments increased on the half to £120 million as opposed to 115 million. But again, that's a minor increase compared to anything else we've looked at. Directly, as you pointed out as well, that their investment strategy is for an environmental future and a more sustainable future, so it's positive to see it, and it's the right thing to do anyway, because that's the way the world needs to go, that's the way the world is going to go. So them getting in hopefully earlier in the trend and investing in it should deliver them strong growth, not just past their 2024 forecast, right up to 2030, 2050. So long-term sustainable hold for me. I don't think I will ever sell legal and general shares. It will just be a case of I just keep accumulating more.
Buy more. Yeah.
Unless there's anything major.
So their operating profits have been on a constant rise. Their aims for their operating profits are high. They want to double it from this year to 2025. But I believe they're attainable from what their strategies seem to look like. They're very well thought out and well detailed strategies, which is really nice to see in the investor report and presentations. Final thoughts. You can see it there. I'm buying more every payday because they are without doubt my favourite stock. They give me great dividends and I get a nice return off them. Recently, in the last couple of weeks, we've had a bit of a dip in stocks, and at that point I bought more and now I'm up more, which is all I can ask, really.
Fantastic.
They have very little cons. I mean, at the end of the day, if people were going to rant on Trustpilot, I'd imagine that many of those reviews are just hate towards the company because they've refused something, you know, and they can only do what's within their company's scope, you know.
It's that net promoter score we were talking about the other week. You get the really bad reviews and the really good reviews. You don't really get the ones where they did the job.
Yeah, they did what they needed to do. 3 stars. You don't get many of them. You only get the top and the bottom end. Yeah,
exactly.
Yeah. They are delivering great, consistent results, and I've seen it in the short time that I've been investing in them. And Ryan, you've seen it across the time that you've been investing. And I don't see any downside to this stock. I think it's a very safe stock. You know, they're very consistent in their dividends as well. I'm going to be putting more money in, and probably for a very long time. Obviously, you need to make your own decisions when you invest, and this is for entertainment only, and just gives you a bit of an idea of what we're doing. Just make sure you do your own research before investing, and make sure you watch the How-To Beginner's Guide to Investing, because that will show you what you need to do before you even begin to start investing in stocks if you're a newbie. Don't forget to like and subscribe, and I hope you all have a lovely week. See you soon, guys.
See ya.